I have a £17,000 portfolio, and I don't really know how. It's been nearly 3 years since I started investing. I started in September 2021. It's really odd because I didn't really have any money back then. I was actually in debt pretty much. I'd pretty much just cleared some of the debt that I had. I've somehow got to £17,000 invested in the stock market. Realistically, today's video is going to be talking about how I got there, sort of some of the things that I've done to get to £17,000. Before I start in some of my tips or some of the things that I've done over the last 3 years, I'm just going to show you the portfolio just so that you can see what's in the portfolio, you know, where I'm getting this £17,000 figure from, and then I can discuss about some of the things that I've actually done over the last 3 years. If we take a look here, I say I've got a £17,000 portfolio, but I have about £15,300 invested. The remainder of that is in cash. So my portfolio total value is £17,158, which is accounted for by £2,283 of total return, which is £392 in dividends, which I've received in these last 3 years. So that difference there is the stock market gain, which you'll see down here is £1,891. This here is a great visual for that, which is £13,400 invested into the stock market. Market value of £15,293. So that's how much my accounts will show as invested. With the cash of £1,800, and then it takes me to £17,158. You know, if I took out the £1,800 of cash, then obviously my portfolio would be valued at £15,300. But realistically, that money, that cash will get invested into the stock market. And I do invest money every single month into the stock market. I just like to keep a little bit of a cash holding. I'm just going to talk about a few things that I've done over the last 3 years that have helped me get to this point and have helped me continue every single month to get to this point. And maybe just a few things that I've learned along the way. One of the main things that I did was first of all, I started watching YouTube. I've been watching YouTube my whole life, but in terms of investing, I wanted to get into investing for a long time. And I stumbled upon crypto YouTube and I stumbled upon investing YouTube, so stock market investing YouTube. They sort of really got me into investing in the stock market, and they were the first things that got me interested in this space. And then I just started watching loads of videos, which is usually what I do when I'm interested in a topic. You know, I've been doing that for 3 years now, just constantly watching YouTube videos, learning about certain types of investing and doing my own bits of research. I also watch podcasts. I also listen to podcasts. I do watch a few podcasts actually, because sometimes they're actually filmed these days. And yeah, I do my own research on the side as well, which, you know, the beginning of this YouTube channel was me doing a bit of research on the side, which is like my GSK stock analysis, which I did like a year ago, the Aviva stock analysis, which I did about a year ago. I stopped doing the videos like that because I didn't really like doing that type of content. But maybe I'll do another, stock analysis type videos. I did the sort of best stock videos. The next thing I did was YouTube. So instead of watching YouTube, I decided to start a YouTube channel. Now, this has been very important simply because it got me to be honest about my investing, showing all of it on a screen, showing all of it to hundreds or thousands of people. You can see from my first video where a year ago, I think it was about £7,000. I think I did a June update or a July update of 2023. I had about £7,000 in my portfolio. And this coming month in July, I think my update should be about 17,000, maybe 17,500, 17,600 pounds. So in the last year, I've gained about £10,000 in my portfolio, which is pretty damn sweet. I'm not going to lie. And YouTube has kept me on that sort of track, doing videos every single month, at least. I think I missed a few months after I sort of lost motivation for YouTube. I was still investing, doing those videos, showing you what I've been doing every single month, the buys I've made, the sales I've made, what my portfolio is doing, has really helped me stay on track and make sure that I'm thinking about it, because I'm thinking about YouTube quite a lot. And now I'm still thinking about investing a lot as well. So it keeps the two things combined and enables me to stay on track and stay up to date with what's going on in my portfolio. The other thing that came along with that is this spreadsheet. I like Excel spreadsheets. Like, I work with Excel spreadsheets in my job. I was known in my last job as the Excel guy. Built a lot of spreadsheets for that company. And then I sort of built this spreadsheet, which, it's, if any of you watch US investing videos, there's a YouTube channel which this looks very similar to, or at least it did in its first iteration. And it has sort of developed since then. So I did sort of copy it, but it is developed into its own thing, and this has helped. Honestly, it helps a lot to be able to see every single month what's happening, the dividends I'm getting, the gains I'm making, how the stocks are performing each single month, and having the goals written down as well. So having these goals written down it's been really important. So my initial one written on here was like 10,000, and then it was 15,000, and now it's 20,000. And when I hit 20,000, you know, is it going to be 25? Is it going to be 30,000? I'm not sure yet. And having the goals of, you know, £100 a month in dividends, 10 years of investing. I'm now at 3 years of investing. Make an ETF a core position of the portfolio, which, you know, it helps to have a goal with this sort of thing instead of just thinking I'm just going to invest every single month. Having goals written down so that you can stay on track with something, so you can, you know, you can track it. And being able to see the performance on, you know, this level of detail instead of just looking at a pie and some, you know, percentages on Trading 212 or any of the other apps, for example, you're actually just getting more information. It is built for myself. I do give it out, but it's not, you know, it's not built for you guys. If you want, you know, if you take the spreadsheet and, you know, I would advise doing your own thing with it, changing it a little bit so that it fits with what you want to do. I see the investing side of things. I see the gains I'm making, the percentages of each of the stocks that I have, or the percentages of each of the sectors that I have. And then I've got the dividend side of things where I can see the dividends every single month. The last 3 months, I'm averaging like £30 a month in dividends, which is dope. Like, it's cool. And that's really what's helped putting my investing data into this spreadsheet. And one of the other things that's gone along with this, which I'm not going to show in this video, it's just a little freebie for you, is I track all of my expenditure and I track my bank accounts every single month. You can see here these 2 tabs. You do not get these 2 tabs when you sign up to the newsletter. This is an expenses tracking sheet, and this is a balance sheet tracking. So it tracks all your bank accounts, and you see every single month what's going on. And that I've done that for 3 years alongside the investing, just so I know what's going on. I can track my expenses every single month. I can see how much money I'm saving every single month, as well as investing every single month, and that really helps. I'm not going to tell you my net worth in this video, at least. And I'm not going to show you my expenses every single month. But maybe I will at some point. If this video does well and there's a demand for it, then maybe I will. So the next thing that has really, really helped me with staying on track and getting to this £17,000 portfolio is putting money into my investing account every single month. Not investing every single month. Not saying to myself, I have to invest X amount every single month, because I like to be a bit surgical. You know, I like to pick a point in the month to invest. Like, I like to see a little bit of a dip and then buy it. Oh, sometimes I'm tracking the price of a stock specifically because I've seen their earnings report and I'm like, oh, you know what? Maybe they're in a bit of a decline at the moment. I'm going to wait a little bit, you know, or I'm thinking their earnings report is coming up, so I'm going to wait a little bit to see what happens with the earnings report. Or I'm thinking, oh, actually, their earnings report is coming up and I know it's going to be good. I have a feeling it's going to be good, so I'm just going to put some more money in now and then hopefully see a little bit of a spike. You know, I'm being surgical with the investing, but the main thing is putting the money in the account. So that's why I've got cash in there, because I'm putting money in the account to make sure that when I do come to invest, when I do come to pick that right moment, I do have the option to do it. So, you know, every single month I get paid, I have to pay for a certain number of things. You know, I've got, you know, rent, I've got a few little bills here and there. You know, you've got your phone bill and your Netflix bill and all that sort of stuff. And you obviously have to put money away, money to the side for your food, you know, for the things that matter, you know, the electric bill, you know, the council tax bill. But one of the things that I include in that is investing. So every single month, I take £600 from that, on that day that I get paid. On the day that I get paid, I take the £600 and I put it straight into Trading 212. I take my rent money and I put it into a different account. I take my food bill that I think that I'm going to have for the month, so a rough estimate, I put that into my spending account. And everything's split out. You know, I'm making sure that I take that £600, or, you know, when I first started, it was £300. You know, when I first started investing, it was £300 a month. You know, then it went to £400, then it went to £500, then it went to £600 over 3 years. So, you know, over a 3-year period, I was doing that. It did, you know, it upped, you know, when I got a pay rise, or, you know, when I felt that I was a bit more comfortable. You know, I think when I went to 300 to 400, it wasn't a pay rise. It was actually because I thought I can actually squeeze a bit more into my investing account. When it went to 500, I got a pay rise. I was extra few £1,000s a year, I was like, you know what, extra £100 a month into the investing. Whether that's been picked up or not on the mic, I don't know. And then when I went to £600, that's because pay rise again. And I've worked hard to get these pay rises. Don't get me wrong, but that's the key, is putting money into the account. And then you're going to log into the account and you're going to go, oh, the cash is building up a little bit. Maybe I should put the money in. Maybe I should invest the money a little bit. My final key that I'm going to talk about is diversification is sort of the general gist of this, but I think ETFs are the key to being consistent, because I don't think you can consistently invest in Microsoft every single month. You probably can, and you'll probably make loads of money out of it. But right now, or a week ago, or 2 weeks ago, they've hit peaks and peaks and peaks and peaks. Is it good to keep buying at the top for one company? Maybe not. But is it fine to keep buying at the top for ETFs? I think so. I think that the general whole market will always rise. There'll be years where it comes down. There'll be years where it goes crazy, and there'll be years when it does nothing. I think the general markets will go up. But I think being able to invest in an ETF every single month, it's the safe way of doing it. It's what your pension's doing. Your pension's just going blap, throw it into an all-world ETF, or throw it into this ETF, this ETF, this ETF, or whatever it is. You see YouTube channels now built on ETF investing. I'm not going to name his name, but he's doing pretty well. And that's because it's easy to do. It's easy to invest in ETFs. There's not as much risk as investing in an individual company. And I think that's one of the keys, is if I were to have started again, I would have just gone all ETFs, because I like investing in individual companies. It has a bit of risk to it. It has a bit of enjoyment to it. I like doing a bit of reading up on what the stocks are doing. I like looking at earnings reports. I like learning about who's running the company. Just a bit of fun. It is just a bit of fun. If I started again, I'd just do ETFs. As you can see at the moment, all I'm really doing is putting money in ETFs. I'm doing the occasional bit of individual stock investing, but I haven't really put that much money into stocks in this whole year. It's more been ETFs, and you see my ETF position is now at 17%, with VWRL being at 13%, and that's going to keep getting more and more and more. I'm going to keep adding to that. You can see it. My goal is to make it 25%, but eventually, ETFs will probably be 50-75% of the portfolio eventually. Those are my 5 things. 5 things I spoke about, maybe 6, that got me to a £17,000 portfolio. These things got me to a £10,000 portfolio. These things got me to a £5,000 portfolio. And these things will probably get me to a 20,000, 25,000, 50,000, £100,000 portfolio. What are the things that you do every single month, or that's helped you get to your portfolio size? Your 10,000, your 15,000, your £2,000, your £1 million portfolio. Tell me down below in the comments what types of things that you do that you think everyone should be doing when they're investing. Thank you.